Hi guys, it's Grayson here. So for those that don't know me, I'm a stock investor and I've experience working with an investment firm. So like I mentioned in the title, yes, I do see a financial crisis or a stock crash is coming. But before I start this video, I'd be greatly appreciated if you like this video and subscribe my channel because I've spent days and weeks of time to prepare and research all this data for you in this video. So let's get to it.
So before I get to my own research and finding, I just want to share you guys real quick on the page 183 of Benjamin Graham's, which is Warren Buffett's mentor, on his book The Intelligent Investor, how he described the characteristics of a bull market, or we call it a financial crisis or a stock crash, and how well does those descriptions he mentioned fits the current market on today. So we'll go through 5 of them one by one. So the first one, historical high price level, which is check, because our market is at an all-time height of 350% since the bottom of the last Great Recession, which is very high, if especially consider if you are a new investor entering the market now, because you are entering at an all-time high and we never know if we will continue to go higher or it will drop eventually. So the second one, we have a high PE ratio. Because our S&P 500 trades at a price per earning ratio, or we call it a price or a PE ratio of a 24 times now, which when we use PE ratio to evaluate a stocks, 24 is pretty high if you ask me. And the third one, low dividend yields versus bonds. Our S&P 500 dividend yields have a 1.85% of dividend per annum, and versus the 1.95 for the 10 years treasury bonds, which is very unusual because our bonds dividend yields are higher than the S&P 500. So those investors might choose bonds over S&P 500, which is a combination of stocks. So this is another thing you have to watch out really carefully. And the fourth thing is, and the fourth characteristic he mentioned is the speculations on margin, which I am uncertain, and I believe many of you are uncertain too. So we'll just go on to the fifth one. And the fifth one is many new issues on low quality IPO, initial public offer. So absolutely, because the IPO market is hot and the majority of companies are not profitable. For example, company like Lyft, like Meets Beyond, like Uber, they don't have enough profitability even before they go to the initial public offer, which is very unusual. And this is one of the characteristics Benjamin Graham mentioned when we want to see if a stock crash is coming. And moving on, I will go on to my research and my findings on why you should prepare for a financial crisis or a stock crash. I don't know if you guys heard of one term, it's called economy life cycle, which the economists believe there's one financial crisis every 10 years. So the first characteristic, which is the historical high price level, the S&P 500 index is at an all-time high up to 350% since the bottom of the last Great Recession. So what does it mean? It could mean that the stocks market are currently being put by trillions and trillions of dollars by the investor, which is using the fiat currency and the paper money that have been keep printing by the government and central banks all over the world. So it could be meaning anything again, but for me it means that the stocks market are currently, it's not undervalued for sure, but is it overvalued? Is a very good question, but what's for sure is it's definitely not cheap, so be cautious when you invest. It's in a historically all-time high. And the second reason is the national debt. And the reason why I say national debt is if we look at the United States national debt, you have a accumulated debt of 23 trillions, which is way off balance the balance sheet of the United States. If you want to know how crazy it is, you have to put it this way. 33 trillions of debt divided by every single citizen of United States. Every one of them owe an amount of $69,100. That's how crazy the balance sheet is for the United States now. Accumulating debt of 23 trillions. And if you're wondering about my home country, Malaysia, we are nowhere near anywhere healthy too, where we accumulate debt of 881 billion. I don't know the other word to put this, but this is the next level madness, guys. Like, this is nowhere near anywhere a healthy financial of any countries. And if we look at countries like Greece, like the some of the Europe country, they actually got bankrupt because of the national debt. So tell me if this is a positive view of futures in the near future's financial health for any country in the world. I just want to demonstrate real quick the difference between million, billion, and trillion. Just look at the small people there with the stacks amount of money and tell me 20 trillion of debt is a small amount. I understand there's an argument that saying the stocks markets are not 100% accurate measurements of the overall economy. But according to a research from the University Avenue Undergraduate Journal of Economics, they think the India report that, quote, the stocks market has traditionally been viewed as an indicator or predictor of the economy, unquote. So there's of course there's another measurements of the economy like GDP, etc. But yes, we have to admit that the stocks market is part of the measurements. And if the economy is really booming and skyrocketing like the stocks market is, and we have to ask ourselves why the rate of purchase home and the real estate in America has gone flat in the recent years. And if you ask me, people are pouring all their assets, all their capital into stocks market, which is not a good sign because it has again been overbought slash overvalued. This video has gone longer than my usual video, so I will stop it right here for part 1. And there's another few reasons why I believe you should be preparing for another financial crisis, and I will update it on the part 2 of this video. So please like this video and subscribe my channel if you like to see more content like this. And as always, have a good day and happy investing.